Welcome to Empire State of Grind, a podcast about the people building the next wave of tech startups in and out of New York City. Please be advised that while the hosts of this podcast are practicing lawyers, some of the guests on this podcast may be clients of the hosts, and the information and content provided during this podcast are for informational purposes only and should not be construed as legal advice or as the positions or stances of the employers of any of the individuals.
Welcome to Empire State of Grind, the podcast where we meet the people building the next wave of tech startups in and out of New York City. On today's episode, I am joined by fellow tech attorney and special co-host Kieran Bath as we visit with Maria Pereda, Director of Partnerships at Capchase, a company that helps SaaS startups with non-dilutive financing. We will learn about the tech financing landscape, how Capchase is disrupting traditional lending, and Maria's role and favorite parts of her job. Additionally, we discuss the role of relationships in business and Maria's views on career navigation in male-dominated fields. And of course, we discuss what makes New York City so special. Let's dive in. Maria, welcome.
Thank you, Aaron and Kieran.
Welcome,
so
Maria.
excited to be here. Thank you so much.
Thanks for joining us. For those in our audience who don't know or aren't familiar with Capchase, one thing I think is cool about you guys for our show is that you're not only a tech startup in New York, but you help out other tech startups or other startups in general, right? So why don't you tell us a little about the company and the company's mission, and then any statistics you're willing to share that gives us an idea of the size
Absolutely,
you're at.
yeah. More than happy to. And I'd love to start there. It's one of the main reasons why I joined Capchase on the first place is really their mission. Before joining Capchase, I was in VC, and one of the things that I spent most of my time on was supporting founders in their fundraising journey. And as part of that, it was very clear to me that fundraising is a pain point for most founders. There's definitely that small exception of somebody that lifts a rock and the round is oversubscribed, but the reality is that is the minority of the cases. Most of the founders dread it, they don't like it, they spend too much time on it, and many times there'll be many months, even over a year, trying to raise capital, whether it's debt or equity, and then it falls apart, right? And the biggest thing is that it's time wasted, which is the most precious resource that any founder can have. So the mission of Capchase is to enable early stage founders, and now late stage, but we really started early stage, and enable them to access non-dilutive financing in a very efficient way. Right, so we built a lot of technology that allows us to underwrite and perform due diligence on these companies. This is just a matter of 24 to 48 hours, and we've built integrations. We've built a platform that really allows us to see a company inside out extremely quickly, so then we can make a risk assessment very fast and then extend financing that it's extremely unbiased, very data driven, very objective. Right, we assess the revenue health of the business, how the company's performing. We're not really looking at your cap table or your background as a founder. We're okay, let's look at your business. Are you growing efficiently? Are you growing in a good way? Do we think that you're going to pay us back in the time frame of the term of our financing? And if so, yes. So that was my main motivation on joining Capchase, is that Capchase was and still is filling a big gap in the market of providing financing options in a very efficient way, so founders can really go back to growing and scaling their businesses and not really have to be fundraising forever.
Right, and you're saying you saw this, you knew the pain of the problem from your time being a VC previously.
Yes, very much so. Especially, there was a lot of founders outside of the traditional hubs in San Francisco in our portfolio. So especially those founders outside of the portfolio didn't have as many alternative options to fund their business. And then just to finish answering your question in terms of stats of what has happened since we started, since 2020, we've now made available over $2 billion in capital to thousands of SaaS companies in US, Canada, UK, and several European countries. So it's been an incredibly fast growing journey. It's been fascinating to be part of it. And I think it's just a testament of the market needed more solutions like this than just the traditional equity and venture debt.
That's very cool. And can you give us an idea on, like, do you have a, I don't know, typical customer profile, or is the idea that you don't?
Yes, we do. I wish we could provide financing to any company out there. Like that would be the dream. But we really focused on SaaS, so software as a service, mainly B2B. And we can go really, really early, like the lender that can go the earliest. We can do as early as 150,000 in annual recurring revenue. And we have clients that are even, publicly traded. So very big range, but I would say our sweet spot is from C to Series C for the most part.
Okay. That's funny. You're kind of in the same, you're describing what makes my ideal client, isn't a SaaS attorney. It's like, you're doing something, but you're not too big yet, where I can help you grow. And do you guys offer, like, I'm not too familiar, but the terms are pretty market standard. It's more the ease of getting the funds and the I guess speed which you can deploy. That's like the real differentiator.
So definitely speed and technology and ease is a big differentiator, right? You don't need to negotiate a term sheet for 6 months with a bank and then for that to be declined and exchange a lot of PDFs and so on. So that's definitely a big one. But I would say the structure of the product is also quite founder friendly, right? Because it doesn't have any warrants, there are no covenants, no security interest, no personal guarantees. So a lot of the things that like a typical bank debt product would have, we don't. It works more like a revolving line of credit that you draw only what you need and pay for what you use. So it's really thought out to be extremely founder friendly compared to the other products out there.
And how about, in terms of how large you are, like by customer count, and then even like your organization itself?
Yeah, so right now, how big we are, so we've made available over 2 billion of capital to thousands of SaaS companies, as I was saying, in the US, Canada, UK, and Europe. How big we are right now, we're close to 150 employees across all of those geographies. And then in terms of like how we are, where we are, we have the commercial teams in New York and London, and then we have our product and engineering teams for the most part in Europe.
Okay, and like the company's headquartered in New York,
Correct.
right? So like the executive team is there as well. Cool. And yeah, it's I'm sure most of the audience knows New York is kind of known as the fintech capital. So it does make sense that this type of product that's kind of like a true marriage of the two sits in New York City. Was that like, were your first clients New York tech companies as well, or did the geography kind of not matter?
So the company was actually started in Boston because two of the founders, the CEO and the COO, were actually at Harvard Business School when they started Capchase. And Capchase grew so quickly and performed so well that they actually didn't finish their MBA, and they dropped out after the first year and did Capchase full time. And so it started in their apartment in Boston, right outside Harvard, and then they were debating where to actually build the company. And given that they played in the fintech space, the New York ecosystem had been growing so much, they had raised capital from a few good investors in New York, so they decided to put the headquarters in New York City.
That makes sense. I mean, it's kind of what this podcast is about, right? Here's where you come to either step on the gas or make it happen in general. And it sounds like that was a good move, right? And were you saying, when was the company founded? 2020 or
in 2020?
Okay, cool. So you guys are growing pretty fast.
Oh yeah,
huh?
No, we went through a period, especially right before. During the pandemic, we grew really quickly, but just right before the venture slowdown in 2022, that we were adding, 5 to 10 people per week at some point, and obviously we slowed that down, but yeah, it's been a super fast growing journey.
I was just super interested about founding a company mid-pandemic, because I know certainly, like, from a SaaS perspective and being SaaS employees ourselves, like, the world was at a standstill, but productivity was at an all-time high. There was so much growth in the SaaS world, and I'm just curious about how that context felt for all of you starting out in that time as well, like the excitement and the growth, despite like the gloom and doom that the world was otherwise in.
And for that, I really give it to our obviously our founders, Miguel and Chemek. They knew that this was a pain point, and everybody would be telling them like, oh, you're going to start a company in the middle of the pandemic, like seems like a very risky move. And to that, they always say like, you're never going to find the right time, the perfect time to start your business. So pandemic or not, just get started, start listening to customers, try to move quickly, be very efficient. And if anything, I think it really motivated them to be super scrappy and capital efficient from day one. Like they have these stories of like how they spend so little money on everything and they were counting every cent. And I think that really became the foundations of the company. And to this day, like we carry a lot of those things of that mentality that has helped us really survive the entire pandemic, survive the entire venture slowdown that we've seen since 2022. So I think it especially during these times is that great companies are founded.
100%. I actually think in retrospect, you'd say that was the perfect time to start a business like this. I don't know if at the time that was the feeling.
In hindsight, yes. At the moment, it probably never feels the same way.
No, I love that ethos though of like I agree that there's no perfect time, just get started. Right, if you wait for perfect, it never comes. The other, or something you had mentioned that made me think of something is, do you view, like, are you guys in that same, like you're saying the venture slowdown, right? Which, just to explain to the audience if they're not aware, just means venture capital has been deploying less money into startups over the past few years. So it's been harder for companies to raise in traditional models, right? And what I'm curious is, are you guys part of that ecosystem, or you're more like an alternative to it? Does that affect you negatively or positively? Because part of me would think a successful company might be going, why should we raise another round when it's harder to do if we can go to an alternative funding route that is there when we need them, but isn't taking equity away when
Absolutely.
we don't?
So to answer that question, I would say it's been net positive. Reason being is that before that, capital was all abundant, it was everywhere, and it was much easier for founders to raise capital. So a lot of these companies were not forced to be capital efficient, like they were using equity capital to fill a cash flow gap. That's not a smart use of funds, and they were never really forced to think strategically about sources and uses of capital. So when the venture slowdown happened, a lot of founders that were expecting like, oh, I'm going to be raising a round in 5 months, it's going to be easy, it's going to be a quick process. That wasn't the case. So they were actually forced to look for alternatives and be smarter about, depending on the use of capital, they should use a specific source of capital. So we are an alternative, but we're extremely complementary to equity capital. And what we tell founders is, and this is something that financial education wasn't as common back then, because they didn't have to. Like, why do I need to be an expert on, how to use properly capital if capital is everywhere and I don't need to, I'm not forced to do it, right? So since then, I think it's a lot more understanding, a lot more common for founders to know how to properly use capital. But equity capital is much better for longer term, unpredictable investments, like building a new product and growing like an engineering team, anything that has an unpredictable ROI in the short, medium, and even long term. Whereas our capital and a lot of debt capital is better for shorter term, more predictable investments, right? You need to repay it. So it's great for customer acquisition, working capital, cash flow gaps, go-to-market hiring. So since then, a lot of founders have been forced to think more strategically about their capital, and that has been really, really positive for us.
No, that makes a lot of sense. I mean, I used to have a business with a friend. We flipped houses, and I used the home equity line of credit to fund the business. And similar to what you're saying is like, these are good products when you need money for something that will pay off over a more predictable period of time. You pay it off. If you need to borrow again for something else, you do. And the line of credit's already there. You don't have to keep applying for it. Versus equity is you're giving a piece away for a chunk and it's not replaceable. So once you spend it, it's gone and you've given away that equity. You would need to raise more and possibly give away more equity. Not the best model for small companies. Yeah, no, very cool. My guess is most of our audience does know a lot of this, but for me, it was like I don't have a finance background, so I've learned all of this kind of in practice. But what I did find is those lines of credit are, to your point, if you're educated about how to use them, they're amazing, especially, at least for our house flipping business, we only had to pay the interest. So one other question I have as a differentiator is, as I've kind of learned more about the venture world, I'm kind of embarrassed I didn't know this up front, but whatever, you learn. A big aspect of like, why is venture money different than just, I don't know, finding it on the street, is that typically it comes with like some expert advice and stuff like that. Is that something you guys offer as well? Like, do you take those type of roles with your borrowers, or is it more transactional?
Yeah.
Or maybe that's not the right word.
No, and again, equity capital is super important. And to your point, they come in with like, strategic support, introductions, like they join your board, like, and again, like Capchase was never created to replace that, but to complement that. Right. What we do at Capchase, because like now you do see a lot more solutions similar to us, like, we were one of the very first ones, and now you see a lot more. So how do you differentiate yourself when you're selling money, right? And that's something that was very important for us for the beginning, and it goes back to the education part, right? Like, okay, let's say I get $3 million from Capchase. Like, how do I properly use it? How do I know I'm allocated money in the smartest way and the most efficient way possible? And for that, we built like a stellar team of what we call growth advisors, that they become an extension, almost like an outsourced CFO to these companies, where it allows them to work together with the company to deploy this capital efficiently. So we work together on like, okay, we understand what are your business goals, what are you trying to achieve with this money? Let's put together some financial models, and we'll set up a schedule of draws that we recommend that you take in order to fund those activities. So we have strategic support in the form of growth advisors. It's different from, a VC, right? Because it's really focused on helping you make the smartest and most efficient use of the capital that we give to you. So it's quite specific, but that's one way. We call it like that white glove support. We don't see ourselves as like transactional, but more like a financial partner to you. And in tech, sometimes like, we try to think about, okay, what's the like highest margin, most efficient business that you can build, which sure, it's very important. But for us, it was very critical that service and that white glove support was part of like the product that we sold to companies, and it worked really, really well. Yeah. That was one.
No, that makes a lot of sense. I mean, especially the company size that you said, they're not going to have a CFO or, maybe a very built out finance department. And that's, I think, kind of a misnomer, right, with founders, is that they're good at everything, which we all know is probably not the case with any human being. So depending on what their team looks like, I mean, Karen and I are both lawyers, very similar. It's like a lot of the questions I get from my clients aren't like, oh, that's the hardest legal question I've ever been asked. It's actually the simplest. You just have nobody there that has any experience, right? So that's actually, I love the answer to that question.
Yeah, and a lot of...
We help you use the money wisely, and we care about how you use it.
Exactly.
Obviously.
And a lot of companies, and we have to compete with a lot of other lenders on every deal, because it's very rare for somebody to just check out and get a term sheet from one person, from one company. So many times, oftentimes, like this is something that happens on a weekly basis, where we win a deal where we didn't give the highest amount and the most inexpensive option. Like we actually gave them less and more expensive, that they still went with us because they felt that strategic support, and that we were true partners of the business, and that's why we would win the deal.
Yeah, that's always very rewarding too, right? To know like you see the value we're offering. We're going to take a short break, but when we come back, we'll hear about Maria's role, her favorite part of the job, and the power of relationships in business.
This episode is brought to you by NextGen Law. NextGen Law supports today's modern tech companies, bringing expertise in drafting and negotiating customer contracts and scaling of go-to-market legal functions. For more information, visit nextgenlaw.com. That's NextGenLaw with hyphens in between each word.com.
So, all right, let's switch roles a little bit and talk about kind of just a little overview of your role at the company. So
we divide our partnerships in mainly 4 verticals. We have venture, VCs, PEs, accelerators. Then we have professional services firms, so the law firms, advisors, brokers, outsourced CXOs, etc., banks, and then last, other tech companies. And from that, we can have the simplest referral relationship all the way to like a deep integration to provide our financing products in our partners platform. And the idea is to, like what we tell our partners is like, you don't need to build your own financing product. Or in the case of VCs, we really help their portfolio companies access financing. We can offer that financing for our partners, so their customers and portfolio companies can be more successful.
Yeah, no, you're right. I mean, you partner with people who have the same interest, right? Which is helping this company grow responsibly.
Yeah.
The other thing I'll say about Maria's role from my perspective is she's also an expert host at cool events. I met her at an event, one of my clients and friends who's a founder took me to. It was funny because I didn't really know what I was getting into, and everyone thought I was founding a company, and I was not.
That's where you got the hat. It's one of my favorite parts of the job. I mean, obviously, like where you meet and nurture your partner relationships is out in the field, and that's where we've seen actually the best business is done. And we started in the pandemic and we started acquiring a lot of relationships virtually, but it really was the moment that we can go back to those events, back to those dinners, and those experiences that we saw a huge uptick in business. And really those relationships are a lot more sticky thanks to those nice experiences that we can put together for people like Aaron. So yeah.
It's like when I first met Maria, I was like, oh, she's cool. That was my immediate impression. Let's talk about your like, your background to kind of how you got to where you're at. Like, where did you grow up? Where did you go to school?
Yeah. So I started far away from New York. So I was actually born in Venezuela. When I was 5, I moved to Madrid, Spain, and I went to, I really grew up in Spain all the way to, finished high school there. And after that, I decided to go to college in the US. So I went to an entrepreneurship school, a small school outside Boston called Babson College. Really loved that school because it was small, especially coming from abroad, like a smaller community made a lot of sense for me. They had a fantastic entrepreneurship and finance program. Boston was like an amazing city for me I loved it so much. I really knew that I wanted to study there. And after that, I started my career in Morgan Stanley in New York. Also far from tech. I started, these sales and trading rotational programs across fixed income and equities. And after that, I started my full-time role in securities lending. For those of you who don't know what that is, essentially we facilitate shorts for hedge funds. So if a hedge fund wants to short Tesla, they would basically go to this desk at Morgan Stanley, and we would be the traders that would facilitate that trade. It was a fascinating experience learning how like the economy works, the financial markets worked with very smart, very sophisticated people, which is what drew me into the first place. After almost 3 years there, I realized, well, this was an exciting industry, like to make change, to build new things. Obviously, it was extremely slow. I mean, and it makes a lot of sense. A company that big, making that much money in the way that they have, like for them to change things, it's a huge process, right? And I felt like I wanted more responsibility. I wanted to build things from scratch. And this was back in 2017. Like, obviously, you started hearing a lot more of like really great tech companies being started and growing extremely quickly. And I wanted to be part of that. After that, I had the opportunity to join two general partners that were raising a first-time fund. They were raising a $100 million fund to invest in early-stage software in the U.S., Latin America, and Europe. And for me, like that felt like a really nice transition into tech. Like instead of like jumping straight into tech, which I did want, but it wasn't easy to sell yourself as an equities trader to get somebody in tech to hire you at a startup. So VC felt a really nice transition. Although very quickly after I started doing VC, I realized that it was very different from my finance background. Your knowledge of how to manage like financial models like wasn't that useful when you're investing in a seed stage company. But it was really interesting to join this VC because in a way it was like building a startup that invested in other startups. So from there I had to do from things like fundraising, helping define the due diligence process. Once we had like enough of a portfolio, like how do we want to do portfolio management and support these founders? So it really felt like helping these two GPs build it from scratch. For that, I actually had to move to Miami. So it was a big change. And everybody, asked me back then, like, how are you joining a fund that hasn't even been raised? They haven't even closed the fund and you left your career at Morgan Stanley. I'm like, look, I don't know that you have that many opportunities to start a VC from scratch. And sometimes you just have to take that leap of faith and jump, especially if you wanna be an entrepreneur at some point, which it's definitely.
Did you also feel like if you were wanting to get into tech from the field you're in, like there's not going to be as many opportunities? This is a good one, you take it?
Yes. And also obviously being in venture capital was a very good way for me to get exposure to a lot of different business models, founders, stages. Right. So, anybody that loves to learn should spend some time in their career in VC because it's something that I loved about that role is that every month you might become a new expert on, ride hailing or health tech in Latin America, or you become an expert on a new field every month that you perform due diligence on like a new company. It also depends on the fund. If it's like more generalist and they don't have such sector focus, this fund was more of like a generalist. So I was just learning so much so quickly, and I knew that working in VC I would just become exposed to a lot of new things that would then allow me to make a more informed decision on which company I wanted to join after that.
Cool. I want to pause just for a second. I think you're hitting on some things like I'm hoping our audience connects with, but in case not, I'm going to hit them over the head with it a little, which is like, didn't have a tech background, but did know you wanted to get involved. Thought kind of like, what skills do you have that you could lend into that ecosystem? Found an opportunity that perhaps at the time wasn't perfect, but it was interesting and challenging and took it. I think, do I have that kind of right? I know you're humble and I'm asking you not to be, or I'm describing it not in that
No,
way,
that's great.
But does that sound accurate?
Great. Although the only thing I would say is like I did feel like that opportunity was extremely exciting because in a way like it felt like I was joining like a new project that invested in tech companies. So for me, like it was extremely exciting. I didn't feel like, oh, this is like a stepping stone to something else. It was like, this might be a huge thing in and of itself. And worst case scenario, it will be part of my career to then end up at like an amazing, fast growing tech company.
I really resonated with what Maria was saying, which I think is probably a common thread for all of us, but just like that hunger for learning, I think that's an essential input, and the comfort of like being, a jack of all trades, but a master of none. I think especially when you're moving about in tech or in VC, it's really about exposure to such a broad field, and being really comfortable with that. And I honestly think that takes a lot of confidence as well as a willingness to learn. So, I find that's always a real essential input into like breaking in to like these very new cutting edge spaces.
Yeah, no, I agree. Okay, cool. I want to hit on too. Sorry, I guess we get back into your story. This part I found really cool. If you want to explain your relationship with the founder of Capchase and how like you came to learn about the company.
Yes. So I was at the VC, right, based in Miami. And that summer we had hired an MBA intern who was super talented. We loved him. And at the end of the summer, he was going to go to Berkeley, first year MBA. And at the end, he said, guys, I'm actually leaving the fund a little bit earlier, and I'm not going to Berkeley because I'm going to be starting a company with a few buddies. The company's called Capchase. By the way, we're raising a seed round if you're interested. But yeah, I'm not going to the MBA. I'm leaving a little bit early. We're super excited about this company. And if you guys are interested, we'd love for you to invest. And we're like, oh, that's super exciting. Please send us the materials. It sounds great. He sent us the materials. I remember it was 2 weeks. We were finishing another deal, so we couldn't jump right straight to it. We looked at the deal, and then we sent him some follow-up questions. And then by the end, he was like, oh, we're actually oversubscribed already. So sorry. Like this round just filled up so quickly. And we were like, what? We totally missed this? Like how did it all happen? So we actually missed it. We didn't invest in Capchase. But I was very compelled, as I was saying at the beginning of the podcast, by the vision. I knew that fundraising was a huge pain point for my portfolio founders. And I'm like, this is going to do well. I think they're going to find product market fit extremely quickly. And I want to stay close. So I stayed quite close. I saw their journey. I was following very closely. They closed that debt facility quite quickly. They were closing a lot of like big customers, scaling incredibly fast, to which, I think it was something like 10 months after that I called, one of the co-founders. I'm like, I'd love to learn more. I'm really interested into what you guys are doing. And, let's see if there's any opportunities for me to join. Long story short, I ended up meeting them in a trip to New York, had a lunch with with the CEO, and then I basically was hired as the first business development partnerships person 2 weeks after that. So it all happened quite quickly and very serendipitously.
That's awesome. We're going to take a short break, and when we come back, we'll hear about some lessons from Maria's career journey that we hope others may find helpful in navigating their own careers. And of course, we're going to get her take on what makes New York so special.
It kind of connects a little bit into like finding mentors and mentees in unexpected places, but I'd be remiss, like as a fellow woman of color in tech and in these industries, if I didn't ask this, Maria. But, obviously you've, I think, done a spectacular job in like conquering some very male-dominated industries. Even tech can be, right, in many ways, especially fintech. So I would love to hear from you in terms of kind of what maybe some of the more challenging moments might have been, what you found to be supportive or helpful, maybe other like inspirations that you found along the way in terms of support from that female perspective, and lastly, even any kind of advice or insights that you might impart to your younger self or other younger women.
Yeah, I guess I love this question, and I guess the best way to answer my first experience on this at Morgan Stanley, it's a funny story. It was one of my first days at the trading floor, and they basically, how it works, like, clients, hedge funds will call, everybody's phone rings, and basically you have to pick up extremely quickly to pick the trade and not have, that a hedge fund, let's say, go to Goldman Sachs and you lost it to the competition. So you have to pick up the phone really quickly and address that request from the client. And my first task, I remember my first day, was like, okay, Maria, like, you're gonna be answering the phone. It needs to be like extremely quickly, and there's no time to like redial and say like, oh, this phone call is for John. Let me transfer the call to John. You need to scream, John, line 4, this hedge fund is calling, right? And here I was, on my first day, like super shy, like I was at this point like 21 years old. And I'm like, you're telling me to scream my lungs out. I'm like I think I was like the only woman in the room. And, there was like a couple of them, but definitely like the minority. And it felt like screaming, like if I was like in a football field, like that felt an extremely daunting experience. I remember I first, like, I wanted to hack, and I'm like, I'm sure I can find a way to like redial it very quickly so I don't need to scream. And they caught me right away, and they're like, we told you that you need to scream, like you need to scream. And then excuse my French, but at some point I said like, okay, fuck it, I'm just gonna do it. I'm gonna scream. It's probably gonna sound horrible, and it's not at all like how I would conduct business, but it's part of the job. Like, let's just do it. And I screamed. And then the first was awkward, the second and the third. But by the fifth, I was like, who cares, And I think, if you're the only woman or person of color in the room, like at first, what I found more helpful is like not to focus too much on that and not let that segregate you or separate you from the rest. Because like when you're starting a job, you really want to fit in a way. Obviously, still keep like your unique differences, but you need to build those relationships, and to build those relationships, you need to build bridges. So for me, I was like, I didn't want to overthink that I was like the only woman in the team, and English actually wasn't my first language. Like, if you don't make a big deal out of it, the rest of the people will make a big deal out of it. So I wanted to kind of like break that barrier that sometimes we might create for ourselves. And then I would say, so in a way, like that helps you like build those bridges, but also you want to keep your unique differences as well. So I think, something that Morgan Stanley did really good is like there was like a lot of like, groups of like women in finance and like people that were just like you, different like you. And then sometimes we would get in a room and like we would chat about our different experiences and try to understand how other people are solving it. So finding peers is really important. And then last but not least, obviously mentors play a huge role. And for me, mentors that made a big difference were actually not only like female mentors, I had some really good female mentors, but I think also having, male mentors that care about diversity is extremely crucial. So I remember having one mentor who thought that, diversity and he actually built and managed a lot of like multicultural programs within Morgan Stanley. Like, he really cared, and he took an interest in mentoring me and helping me grow in my career. Like that really helped me propel into my career and felt me like I could do anything despite me not being from the US and, obviously being a woman in a male dominated industry. And I think a lot of that foundation I've carried throughout my career, like the same thing in Capchase. I mean, obviously we're not a company that's 50-50 male female. Like, I wish we could say that. We're better than the industry average, but there's still so much room for improvement. And I think those things that I learned at Morgan Stanley I still carry with me. And I hope that I can help new women that join Capchae as an intern or as like just right out of college to have that foundation that they can also not be intimidated when they are in a room of like all male engineers and they're only the female engineer, like not let that take them back or not help them put the best work forward.
No, that's excellent. And some of it is really just age-old wisdom, right? Of just like letting the work speak for itself, focusing on the job at hand, and not counting yourself out from the get-go. Like, I think that's all kind of really tried and true pieces of advice. And we are like in a much better world today, I have to say. So I definitely kind of appreciate having that contrast as well. But no, thank you for answering that.
Yeah, no, I gotta say we're in a much better place today. I remember people telling me like, ooh, you work in Wall Street, like must be really hard. I'm like, oh my God, it's not hard at all. Like, I feel like I've had a really great experience. It's probably was really hard in the 80s and the early 90s, but like, it's a much better place today. And I think they're really trying hard in Wall Street and in tech to get more diverse candidates into the pool. I think we can't, like, people can do this in decision-making seats, like they can do a better job about increasing the pipeline of diverse candidates, because sometimes it's just easy to go to the typical places where like everybody looks the same. But like, I think there needs to be a more of an effort of finding those diverse candidates so you can have a diverse table.
Yeah, definitely.
Yeah.
One thing you said I really like, and I hope people hear, is like, don't doubt why you're there.
Yeah.
Like you're there because of your skills, and please don't doubt that.
Yeah, and I love the point that you made. I think it's like the imposter syndrome of like doubting yourself. I think it's easier to have imposter syndrome if you are the only person of color in the room or the only woman in the room, because you're like I'm the only one here that's that's unique, and like should I even be here on the first place? So I think I love what you said, Aaron, on like you're there for a reason. And I actually have had people tell me that when I have doubted myself, like Morgan Stanley hired you for a reason, or this founder hired you for a reason. Like trust on that fact, and trust that you have everything that you need to be successful. So don't dwell on the fact that you are not like everybody else in the room. That might be your superpower. So just trust that you're there for a reason, and let that go, and just focus on doing an amazing job, and the work will speak for itself.
Yeah, no, 100%. Okay, final question for you here, which we like to ask. Karen, you wanna hit this one up?
But what is it? It's your favorite thing about New York City and living in New York City?
What I love about New York City is the people. Like really the most amazing thing about New York is like, it's what an amazing melting pot of amazing, crazy people that are trying to do something big. I think like that energy is infectious. Like you're in the street and you feel it. And, that energy sometimes can be extremely draining, and let's not lie, right? But if you really know how to harness it and know how to win and how to take breaks, it can really propel you to do some amazing things. And those serendipitous experiences of like meeting somebody over dinner and then it being a great opportunity, I feel like that kind of can only happen in New York City, very few other places, that's for sure.
Agreed.
It's funny. I was really hoping asking guests this question would like reveal new like restaurants or burger spots to me or something. But that's everyone's answer. It's like the people, the energy, which has always been like how I feel as well. And then it brings all this other cool like cultural elements because of the people and their that feverish kind of pitch to do something at a high level.
I would say it's just so unique about New York. It's like the people, like, it's like good food. You can have it in like so many other cities. Like Mexico City has amazing food, and like, it's in Europe, in Madrid, you can have amazing food, right? But I think like something unique about New York is like that energy, that, incredible people from many different backgrounds trying to make it in their own space, like bring together. It's very unique.
Agreed. Do you feel like, sorry, and we'll let you go after this. Like, do you feel like Miami is starting to become more like that? You've been there for like, 5 or 7 years now? And I know a lot has changed from just visiting every now and then.
It's changed a lot. So when I was here to join that opportunity for that venture capital fund, like Miami Tech wasn't really a thing. It had, had a few players, but really wasn't a thing. I think the pandemic drastically accelerated the growth of Miami. I still think it has a long ways to go, but I think that's one of the exciting things. Like speaking with a lot of people that were critical in the growth of New York as a tech ecosystem, like would tell me these stories that I'm like, oh, reminds it like that resembles a lot of the things that I see in Miami today and over the past couple of years. So I think it's nascent. It's growing really fast. How fast it has grown over the past, 4 years has been astounding. And I think what's exciting about it is there's still a lot of room to go, right? So if you love building ecosystems and doing things from scratch, I mean, I would rather be and participate in those like more emerging ecosystems than like a very developed one where there might be a lot less for you to contribute and be part of.
Yeah, no, I think that's what anyone in tech really gets, like whether that's why you come, it's like a big benefit of why you stay is like, oh, I can make a real difference quickly.
Yeah.
Awesome. Well, Maria, thank you so much for joining us. We'll let you go. And, why don't you tell before you leave, like where people can either find you or your company if they're interested in, the services you guys
Absolutely. So if you're interested in just chatting anything, VC, fintech, financing, anything, you can obviously find me on LinkedIn or in my email, maria@capchase.com. So that's an easy one. I'm happy to always like jump on a call and chat, or better to do it in person, right, and grab coffee or go over dinner.
That's right.
Definitely. So no, always happy to chat and go more in depth in some of these topics.
Amazing. All right, thank you again, and thanks everyone for listening. We'll catch you next time. Thanks for tuning in to this episode of Empire State of Grind. As always, I'm your host, Aaron Fisher. I'm joined by my esteemed co-host, Kieran Bath, and special thanks to our producer, Brian Neiman. We'll be back with new episodes twice a month. Please like, subscribe, and leave us some comments. And as we say in New York, we out.